Hey everyone, welcome back to Corporate Decoder, the place where we analyze the sometimes crazy, often confusing world of corporate filings. Today, we're diving into a company that's making headlines for all the wrong reasons. Buckle up because this one's a bumpy ride. We're going to look at why Nikola Corporation, yes, that electric vehicle company, just got a delisting notice from Nasdaq. Things are not looking good, and we will explain why in plain English. This report is in 8K form, a current report that companies file to announce major events. The date to keep in mind is February 19, 2025, because that's when things really started to go downhill for Nikola. This is when they filed for bankruptcy protection. The most important part of this filing is item 3.01. This is where Nikola announces they received a notice saying they're getting kicked off the Nasdaq stock exchange. They failed to meet requirements to be listed in Nasdaq and will be delisted. It's like getting a failing grade for not following the rules. Let's dig into why Nasdaq is giving them the boot. As the company reported on February 19, 2025, Nikola and some of its related companies decided to file for Chapter 11 bankruptcy. Chapter 11 is a type of bankruptcy that allows a company to reorganize and try to get back on its feet, but it's a clear sign of serious financial trouble. Because of the bankruptcy filing, Nasdaq sent Nikola a letter which they call the Delisting Notice. The staff at Nasdaq determined that Nikola's stock is going to be removed or delisted from the exchange because they don't meet requirements for remaining on Nasdaq. Nasdaq listed a few reasons for their decision. First, the bankruptcy filing itself raised concerns for the public. Second, they're worried about what's left for the people who own Nikola stock after the bankruptcy proceedings. And third, they don't think Nikola can keep up with the rules needed to stay listed on Nasdaq. The letter from Nasdaq says that trading of Nikola's stock will stop on February 26, 2025, so investors will not be able to buy or sell the stock on Nasdaq. The company will be removed from Nasdaq's stock exchange listing. Nikola isn't planning to fight this decision. They're accepting that their stock will be suspended from trading on Nasdaq on February 26, 2025. This is a significant event that's going to affect their stock price and investor confidence. So what does this all mean? Well, Nikola, a company that once promised to revolutionize the trucking industry with electric and hydrogen-powered vehicles, is in deep trouble. The bankruptcy filing and subsequent delisting from Nasdaq are major setbacks. The future for Nikola is now highly uncertain and investors face significant risks. Now let's talk about the implications of this news. Nikola's situation highlights several important points. First, it shows how quickly things can change in the electric vehicle market. What was once a promising startup is now struggling to survive. Second, it underscores the importance of financial stability and sound business practices. Nikola's problems were not just about technology, they were also about management and financial decisions. Third, it serves as a reminder of the risks involved in investing in emerging technologies. While the potential rewards can be high, the risks are also substantial. Looking at the situation, there's a combination of strengths and weaknesses. Nikola's early vision and initial hype created a lot of excitement around hydrogen and electric trucks. However, the company has struggled with execution, facing delays, technical challenges, and questions about its technology. The bankruptcy and delisting definitely point to significant weaknesses. The big risk is that Nikola might not be able to successfully reorganize and emerge from bankruptcy. Also, the loss of investor confidence could make it hard for them to raise money in the future. So what's the outlook for Nikola's stock? Well, considering the bankruptcy and delisting, it's hard to put a positive spin on things. The stock's value will likely be very unstable and speculative. It will probably be very volatile. The stock is likely going to be worth very, very little. In conclusion, Nikola's situation is a cautionary tale. While the company had a promising vision, it faced significant challenges and ultimately failed to deliver on its promises. Given the bankruptcy, delisting, and uncertain future, my recommendation is decidedly bearish, meaning I expect the stock price to decline further. Thanks for watching. If you found this breakdown helpful, please subscribe, like, and comment below. Let me know what other companies you'd like me to decode.